Thank you for coming back and for our segment on generational wealth and financial literacy. This is going to be part six. It's kind of a continuation of part five. We're going to talk about tax planning and strategies for business owners, solo entrepreneurs, people that have side hustles, okay, small business owners, okay. So being in business allows you to write off a lot of your I don't know, everyday expenses, you know. So as an example, you're a solo entrepreneur. Uh, so you go to a conference, fly to Hawaii. So you get to write off the plane fare, the hotel room, the meals. Okay, as long as you're doing something every day, whether it's a conference or you're flying for business, just about all of those expenses for that trip is a write-off. You get to write off your automobile, your gas, your car note. Now, when it comes to that, if you use that vehicle 100% of the time, then you can write off 100% of those expenses of the insurance. You can depreciate that automobile. Okay, write off your cell phone. I mean, it's endless. Uh, Legitimately, the things that you can write off. And what that does is shelter the actual income that you have coming in. You know, so it's that's the way that I look at it. So you got $100,000 in income. You have let's say $50,000 in expenses. So you have an office. You have a secretary, part-time secretary, or a virtual assistant. Okay, you can write all that off. Now, if you weren't in business, you couldn't write off that automobile. You couldn't write off the gas. You couldn't depreciate that. Okay, so now you're taking these ordinary expenses that you have. Now you're able to write that off. So you would have those expenses anyway. That's why I say it's your sheltering income because you're going to spend that money anyway, whether you're in business or not. Now maybe you will drive a little more. Your cell phone bill may be a little bigger, but in essence, you're sheltering some of that $100,000 because those are normal and everyday expenses you would have anyway if you weren't in business. Okay, so you would go to a Schedule C. We'll get to an LLC in a minute. If you don't have an LLC or a business entity like a LLC or a C corp or an S corp, you go to the Schedule C. Okay, so you fill the Schedule C out or have your tax professionals fill it out for you, and then you'll come up with, now there's a self-employment tax that you have to pay on top of the ordinary income tax, you know, that you pay. But anyway, uh, great situation to be in to what I call shelter uh, money. Now, in addition to that, there are 401k, solo 401ks. They're what you call these are what we call qualified plans. So the 401k for solo entrepreneurs. There's what you call a SEP IRA, which is another qualified plan, okay, which is for solo entrepreneurs. Both of those you can put up close to or over 50, up to 50,000. I think it may differ a little bit for the 401k or the SEP, but around about that number. And it's percentage of your net profit or your profit, not your gross income or gross sales or your gross income, is deducted by the your net profit. So you got enough profit to put in up to $50,000. Again, here you go. Here's another benefit of being a business owner. Not only can you write off just about everything that's associated in your everyday life, okay, that these are now business expenses. You have a qualified plan like a 401k or a SEP that you can further reduce your tax liability. Okay, those are great benefits. Those are the perks of being in business. Of course, one of the big things with being in business is to make a profit. Okay, that's always the challenge, is to make a profit. Okay, and so in a nutshell, those are the bennies. That's the benefit of being a business owner. Okay, and then like say if you own a property, going back to the part five, then if you own property or own a property, then that's even better. Now that goes from your Schedule C to your personal, and you have further, now you're itemizing your deductions and you're saving more tax money. Okay. Uh, LLCs are pretty popular right now. Uh, LLC, one of the big things is that it's helps against any liability or anybody that may sue you. They can only sue the company. They can't come after your personal assets. Obviously, there are other benefits, but that's the main one. If you happen to get sued, they can only come after the assets in the business, and not in your personal assets. Now, you're doing a Schedule C, they can come after your personal assets and your business assets. So one of the big benefits or bennies of having an LLC is the liability protection portion of that. Okay, and we talked about the 401ks, we talked about the IRA, business write-offs. Okay, all right. So those are the big benefits. There's more. I don't have time to go into all of that, but you want to take advantage of all of those things. The name of the game is paying as less taxes as possible that you legally can. You know, you're getting when you go in the gray area. The big thing is have your receipts. Okay, I'm also a certified pro with QuickBooks Online, so I do accounting and bookkeeping for my clients. I do their corporate or company tax returns, and I handle their financial affairs. So they're all intertwined. Okay, and you're just dealing with one person. Okay, but if you need some kind of accounting software, QuickBooks is a good one. You probably want to use that. I recommend that. So make sure your accounting and bookkeeping in line. You have that in line in the event that IRS has a question for you. Okay. All right. Well, that's it. The next one is going to be on investment and investment strategies and planning. And anyway, you know my motto: make some money, save some money. All right. I hope this was informative for you. And have a blessed day, and we'll see you at the next one.